Good morning, ladies and gentlemen. It is December 11th, 2023, 8:45 a.m. We are back with another market open. I hope everyone had a great weekend. I had a nice weekend, got to relax, got to get some stuff together, get some work done, and we are back here Monday morning. Woke up pretty early today, got a bunch of work done this Monday morning, so feeling pretty good. And now we're live once again for the market open. We got a lot to talk about, folks. Number one, Palantir. We finally know who's selling Palantir. We got a major institutional pension fund, one of the largest in the world, that is selling Palantir. So we're going to be discussing a little bit about why they were selling and kind of what happened as a result of them selling. Palantir right now about 1796 in the pre-market. Number two, we've got some news on Bitcoin. Little old bitty coin fell down yesterday, almost 7% on the day. It was down to almost $40,000 right now at around 41,900, 42,000. But a little bit of a liquidation going on Bitcoin. $300 million were liquidated. So I want to talk about why that happened. We saw a lot of alternative coins also fall. Pretty much the entire, crypto market just fell last night. It was around, I think it was like 10 p.m. It just a little flash crash we saw. So I want to discuss some of the things happening there. 10-year ticking up a little bit to 4.2. And then we have a bunch of different headlines on acquisitions. Macys potentially going private at $5.8 billion. Occidental Petroleum buying some more companies today. And then on top of that, we have a new Apple price target that I wanted to talk about by Dan Ives. So we got a lot to talk about, a lot to roll in. Second week of December trading, which is very exciting because we've had a very nice rally so far in November. Santa Claus has come to town. We'll see if he can stay in town and see where the market ends up throughout the month of December. Marcus, DRP, Invisible Voices, Colorblind Collector, Kane Frost, Kim, Charles Gator, iShow Sad, Win, Victor Hernandez. Good morning, everyone. Greetings from Spain. Victor, thank you for being here. Bay Ray, YouTube user, greetings from Pennsylvania. Greetings, YouTube user. That was the best nickname I've seen in a while. Tobora, John, Tim, Jude Jr., Jason, Carter, Imnop, Sanjay, Ramu, Jem, Mark Strang, Paul, Kelly says OMG hi, OMG hello to you as well. Kelly, hope you're doing well. Lang, Kaiser, Steve Smith, Jeremy Black, thank you all for being here today. Let's get started. Let's get into this market open. So I think we'll start off with some Palantir news. And we'll talk about that institutional fund that was selling. Now, while we get into that, I do want to give a little bit of an anecdotal, just quick story that happened over the weekend that I think all of you will get a kick out of. Because if you don't get a kick out of this, I don't know what you can get a kick out of. Here we go. Before we get into the institutional seller that sold Palantir, this is what happened over the weekend. My sister is 30 years old, okay? She is dating. She goes on dates. So she went on a date this weekend with a guy, and the guy told her that he has post notifications on for all of my Palantir tweets, meaning every time I tweet with the hashtag Palantir, he gets a notification because he owns a lot of Palantir and he doesn't miss a single video that I post. Let's just say this date was Saturday night. We woke up Sunday morning and, I went to talk to her about how the date was. And she was not happy with this news. Let's just say that. I got a little bit of a kick out of it. Okay, I got a little bit of a kick out of it. The reason I got a kick out of this is because this is hilarious. First of all, my sister doesn't even know the online personality I have. I mean, I tried to tell her, she's like, oh, you're just on YouTube. I'm like, dude, there's some people that show up to the live stream every day. We're averaging some decent numbers. And she's like, okay, whatever. She doesn't get it. And then on Twitter, I try to tell her there's 20,000 followers. People kind of care about what I have to say. She's like, all right, whatever. You're still a nerd. This is when it finally hit her. Okay. This is when it hit her because she had to realize that a guy she could potentially be married to, I know I'm extrapolating it, but that's the point of dating, right? At her age, she wants to get married, likes my content so much that he had to bring up my tweets in front of her. I mean, this was incredible. This was just great. This is the first time I've never gotten recognized in public, never anything like that. I don't think I'm that big by any sense of the imagination. So this was really cool. And she was just like, so do you want to meet him one day? And he was like, yeah, that would be awesome. I would love to meet him. He was like actually fangirling in front of her on a date. So this was awesome. This was hilarious. This was great. It just goes to show that the nature of Palantir goes beyond everything that we thought it was. I mean, to the point where someone on a date with someone that I know, like my sister, is actually bringing up my name. And second of all, it proves that your boy's a little legit. Proves that your boy's a little legit if this is the situation that's happening. Now, if this happens again, one time is cool. If this happens again, on a second date, that's when I'm going to lose my mind, because that's when it would just be absolutely crazy. But she was not happy. She was not happy about it. I mean, she was pretty pissed off. She was like, I cannot believe and then, it was also funny because I tweet about my sister so much, just randomly say some stupid shit. He pulled out his phone and he searched my name with the word sister on Twitter, like that advanced search function. And he showed her all the tweets that I tweet about her. And she was just laughing because she was like, why are you tweeting about me? And I'm like, because you give me content to talk about and you're not on Twitter. If you had Twitter, I would tag you. But it was great. It was just absolutely phenomenal. It was absolutely great. So this was really fun over the weekend. Kelly says, see, you don't need me to fangirl. No, I still need you to fangirl when you see me in person, because that's what makes it fun. So you have to fangirl. Johnny says, plot twist now amidst dating him. Dude, I mean, I think the way he was acting is he definitely was interested in someone else a little bit more than her. That's all I'm going to say. All right. So Canada's public sector pension fund has sold 111,000 shares of Palantir. This was the news. I think this is why we saw some downside pressure to Palantir, selling side pressure in the early month of December in the past 2 weeks. This is one of the largest pension funds in the world, Canada's Public Sector Pension Investment Board. They sold AT&T, they sold Palantir, and they bought a ton of NVIDIA and a ton of Intel. They sold 111,000 shares of Palantir. So this was really interesting to me to see them kind of do this. It actually makes sense when you think about it. If you're a public sector pension fund, ultimately you're supposed to be on the side of safe versus risky. Palantir is still a very risky investment when you think about it in regards to them having to prove that they can continue growing. So as a result of that, I'm assuming they were like, you know what, we should take our 180% gains year to date, which makes a lot of sense, and we should put it into something safer like Intel, which gives you a dividend at the end of the day. So, if you're getting a dividend from Intel, I would probably argue that's safer for a pension fund that's supposed to not lose money, because that's not a good thing to do. And as a result of that, that's likely why they sold some of their Palantir. Now, the other reason why I think they sold some of their Palantir, obviously, is it's up a lot, but they wanted to buy Intel and NVIDIA. They probably see, if you just put 2 and 2 together, Palantir being a derivative company from NVIDIA's GPU demand in regards to AI, Palantir obviously going to be a beneficiary of AI over the long term, but NVIDIA is the granddaddy of where this AI demand is coming from. And I think the fund managers of this public pension fund were like, well, should we invest in software companies generating AI demand, or should we invest in hardware companies or like companies that are, creating the GPUs that ultimately are going to always be at the top when it comes to growth? NVIDIA growing 200% year over year, which is absolutely phenomenal numbers, $18 billion in revenue, market expected $16 billion. So it doesn't, it's not that crazy to sell something that's up 200% year to date, that's not growing as much as NVIDIA, and to invest in NVIDIA and then to take some of that money and put it into Intel, which is something safer. Something I think we expected. We're getting some clarity on funds that are selling. I think we're going to see more funds that are going to start to sell soon, towards the end of the year when it comes to Palantir and them just offloading some of the gains that they've had. But as of now, we are seeing a little bit of sell side pressure on Palantir. Sibisco says, Amit, has your sister never watched your market open? No, she's never watched my market open. So she does not watch my market open. Danger says, this guy used Palantir as a dating app to find a date instead of Tinder, and it's connecting with a Amit sister. Makes sense. For those that are just joining, the headline of today was that my sister went on a date over the weekend, and the guy was fangirling about my Palantir content to her because he owns Palantir shares. And so she was not happy about that. It was kind of funny though when she told me. It was just so hilarious because I was like, you don't believe like that I'm on the internet and that I'm making content. And like my sister is really afraid of content. She's very creative. She's really good at like poetry, and she has an artistic side of herself, but she would never put it out there because if someone says one negative thing, she would like collapse. Like that's just her personality, right? She can't handle that type of public criticism. For me, I don't really give a fuck. I'm like, you can say whatever the fuck you want as long as you're paying attention. That's all. I thrive on that where she doesn't. And so the idea that her brother is like doing this thing online and now she has to deal with it in intimate settings, it's hilarious to me, but it's not something she wanted to deal with. So that was really funny over the weekend. Nonetheless, that is the news on Palantir. 111,000 shares sold by one of this pension funds, and this article came out from Barron's this morning. Palantir right now in the pre-markets. Let's take a look at where it's at, and then we'll talk about Bitcoin because we're seeing some downside momentum there. Palantir, $18.02 in the pre-markets, up 1.46%. Rallied nicely on Friday. Friday, we hit not an all-time high, a 52-week high on the S&P 500 and the NASDAQ. S&P right now, 459.90, barely flat. I mean, it's down 0.07%. It was at 460.20 on Friday, which was really nice to see. We had a nice Friday rally. We are at the highest level that we have been at in 20 months since March 2022. NASDAQ 14,403. Since March 2022, we haven't been at this level when it comes to Palantir. Not Palantir, the S&P 500. So overall market doing a very nice job seeing some of this momentum go higher. And, second week of December, we'll see where it ends up turning out. All right, so that was Palantir. Let's move on to Bitcoin. We got to discuss that and some of the issues going on there. I hope everyone had a great weekend. Let me know in the chat what you did over the weekend. Did you go anywhere? Did you eat anything? Did you hang out with anyone special? What did you do over the weekend? Let me know. I had a nice, fun little weekend. I got to have a nice little Zoom date with someone, so it was interesting, and we got to call a bunch of people on that Zoom date. We almost went live, but we didn't go live on YouTube. We were like, you know what, let's not do this. So we were just chilling. It was a fun little Saturday night and got to relax a little bit. Now here's what we're seeing on Bitcoin. As you can see, it's down 4% in the past 24 hours. Ethereum down 4.5%. XRP down 5.39%, Solana down 5.8%, Solana now falling below the 70s in the $68 range, Cardano as well, down 6.7%. Obviously, for the past 7 days, Bitcoin, Ethereum, Solana, all of these guys have done really well. Cardano up 35%. But in the past, 24 hours, we saw a pretty nasty decline. Ray says, I went on a date with your sister. I hate you, Ray. That's so annoying. Bayray says, I told him that we could go live. Yep, but Bayray, you were too drunk, so we could not go live. It just wasn't possible. In general, we're seeing some market decline on Bitcoin. This is the thing I want to show you guys. This is where last night it went pretty bad. So let me see if I can pull this up right here. Yeah, this was basically what you saw. This is 11 hours ago. $333 million worth of Bitcoin long positions were liquidated, and we saw a pretty hefty decline. Right now, why did this happen? Okay, I think, quite frankly, it's pretty obvious. It's not that amazing analysis. Bitcoin has gone up a lot. Right, Bitcoin has gone up a lot over the past year. It's up 162%. Over the past couple of months, it's up almost 70%. And so seeing Bitcoin do as well as Bitcoin did, I think gives some people the necessity to take profits. Now, this is also something very natural. I'm learning about the Bitcoin world as someone who's getting deeper into crypto. You're likely going to see this type of insane volatility. I mean, we saw a crap ton of volatility to the upside this year, going up 162%. One good stat by Anthony Pompliano: if you dollar cost averaged every day $10 into Bitcoin since January 1st, you would still be up more than 100% year to date, which means through the thick and thin of the volatility that happens within Bitcoin, you would still be up better than most investments this year just because of how well Bitcoin has performed. 42,000 right now. On some technical analysis I've seen, 37, 38,000 is where there is a lot of support if we fall down a little bit lower. Could that happen? I don't know, but we've had a great month for Bitcoin, and I think we've just got to see, how badly does Bitcoin continue to fall, or is there enough support to continue to get it higher? Remember the halving event, which I watched the video this weekend, and I finally understand what the halving event is. Halving, however the hell you call it. That's happening in April 2024. So I actually understand why, from a supply demand perspective, that actually should theoretically increase the price of Bitcoin. And historically, after the halving event, 12 to 18 months after has been Bitcoin's best run. So if you look at every halving event that has happened, the next year and a half after that, Bitcoin tends to do the best it's ever done throughout the life cycle of its price chart. So that makes a lot of sense. And on top of that, the ETF approvals should be happening theoretically between January 5th and January 10th. So you put those two catalysts together, Bitcoin is ready to have a pretty strong year if that is able to happen, which should lift up the entire crypto markets along with interest rates coming down, because that helps a lot of the Bitcoin companies as well. But ultimately, we're going to have to see, if these assets end up not, performing well towards the end of the year, or if people want to take their profits going into the end of December. Amidst audiences halving in April 2024. Dude, no, if anything, if Bitcoin goes up, the audience should go higher. That's what should happen. Kelly says, weird, I had a terrible date this weekend. Well, I don't know what date you were on, Kelly, but I had a phenomenal date. My date was like out of this world. Just blew my mind. It was just, even though it was Zoom, it was great. Inbound says, Amit, you should do more late night casual vibes. You know what? I'm thinking of bringing that back. It's just during the week, it's very hard to do it. When I was a lot younger, a year ago, I did it. I just have to sleep early. I try to get into bed by 10:30 every night because I got to wake up at like 3, 4 a.m. But maybe on Saturday nights, Kelly says, I miss late night stock talks. Maybe on Saturday nights, we bring back late night stock talks because I do miss it as well. It's a time where we can just all chill and discuss anything. If I had a friend that would go live with me as well, I have someone in mind that would be really fun on Saturday nights. I don't know if that'll happen, but we'll see. We'll see if we can make that a thing. Bitcoin right now, 42,000. Palantir, $18.08 in the pre-market. Robinhood, $11.62. Robinhood rallied pretty aggressively on Friday. Robinhood going up to $11.94, which is really exciting to see, trying to break that $12 barrier, which is a big level of resistance for Robinhood. It broke 1171, which was important. 1171 was a technical part of the resistance for Robinhood. Broke through that now at 1160 in the pre-markets. I wouldn't be surprised, given the Bitcoin dump, to see Robinhood go back to $10.80. I think that is very possible, just given Robinhood starting to perform with Bitcoin. And so we could see a nice little flash crash on Robinhood as well, just given Robinhood's performing with Bitcoin. One of the things people, I think, don't understand about Robinhood is that it doesn't really care if Bitcoin's up or down. It cares more about the volatility of Bitcoin. So if there's more trading on Bitcoin, then that's when we are going to get a lot more momentum in regards to Robinhood, going up or down. Robinhood gets money off the payment for order flow from the volatility. So if Bitcoin's being traded, that's really all that matters. Now, obviously, if Bitcoin goes up, more people are trading, which is good for Robinhood, good for a lot of these other companies, but it's not necessarily bad for Robinhood either. And so, as a result of that, we're seeing Robinhood go down a little bit right now. Go live from your bed sleeping stream. People do this on Twitch. It's Kai Cenat. He's a great streamer. Gets 70,000 people who watch him go to sleep, which is insane. Hot tub stream. No, not going to do that. Twitch has been under some fire because they've been allowing some really weird streams happen on Twitch with women that are, let's just say, not necessarily fully dressed. And so Twitch is having to deal with that stuff. So probably not going to do that. But in general, I think late night stock talks would be a good idea to bring back. All right. So Coinbase is down 3% right now. Marathon is down 6%. Ride is down 6%. Bitfarms is down 8%. This is the company that I sold out of my calls. And then on top of that, you got Coinbase down 4%. CleanSpark is also down about 6% right now. Where's CleanSpark? Yeah, CleanSpark down 7.6% in the pre-markets. This is the volatility you sign up when it comes to the crypto companies, because Bitcoin goes down 5%, even though Bitcoin technically recovered a little bit, right? It was almost at 40,000. Now it's at 42,000. So not a full recovery, but a decent, swing to the upside. The dip was bought. You got CleanSpark down. Hut 8 mining down 6.5%, Bitfarms down 9% now, Riot down, Marathon down, Coinbase down. A lot of these companies are very cyclical with Bitcoin. So if you got in when Bitcoin was down, then you're going to get Bitcoin going. When you got in when Bitcoin was down and these stocks were down and Bitcoin went up, you're going to get some upside momentum. If you buy in when Bitcoin's doing well and then Bitcoin does bad, a lot of these companies do bad. I wouldn't be surprised if we see a rough opening market for these companies, because a lot of people are buying call options. If you just look at some of these charts and look at the call option pressure on these companies. So if you bought calls for CleanSpark, like a $15 target or a $10 target, and you didn't sell, CleanSpark hit $10 on Friday, but now it's at $9.55. Your calls are going to be down, especially if you bought them at $9.90 on Friday. And I know a lot of people probably FOMO'd into those calls since they saw them grow up dramatically. CleanSpark company up 300% year to date. Marathon up 325% year to date. A lot of these companies, Bitfarms is up 100% in the past week, right? This is why I sold my Bitfarm calls really early, is because I didn't feel a lot of this stuff was natural the way it was going up. Now, granted, Bitcoin has sustained its level at 42,000, so that's okay for a lot of these crypto companies. But if Bitcoin starts to fall to that $38,000, $37,000 range, these companies are going to get destroyed. I mean, they're going to be down 20, 30% within the next week. Like, it's just going to happen because they literally trade on the fundamentals of Bitcoin, because they are Bitcoin mining companies. MicroStrategy, let's check out them as well. Yeah, MicroStrategy is down 4% in the pre-markets, now at $578. MicroStrategy owns 174,000 Bitcoin. So if Bitcoin goes down, their company goes down as well. A lot of their balance sheet ultimately is Bitcoin at the end of the day. And so that's some of the problems we're seeing there on the crypto, in the crypto world. SoFi right now, let's check on SoFi right now in the pre-market before we move on to some headlines. SoFi 813 up 2.4%. SoFi's had a tough time kind of maintaining its $8 range. It was stuck at like $7.90 in the pre-markets for a while. Then it was stuck at $7.90 on Friday, went to $8, went back down to $7.94. So SoFi kind of stuck at this $8 range. We'll see if it can break out anytime soon, but we're seeing some of the other fintech companies break out a little more in the pre-markets. Okay, cool. So let's look at some other stuff we've got going on. Let's talk about Macys. Macys got an offer to go private at $5.8 billion. Let's get a little bit of coverage on this. Let me know if you still shop at Macys. My mom used to shop at Macys a lot when I was younger. I used to go with her to Macys, a company that's kind of been dead just in terms of not being able to keep up with e-commerce and make their demand as prevalent as it used to be when people went to stores. Here is a potential offer for $5.8 billion, taking them public. Macy's up 20% right now in the pre-markets.
At this point, it's a gain of 19.6%. Joining us right now is Dana Telsey. She's Telsey Advisor Group CEO and Chief Research Officer. And Dana, what do you think? Does this make sense to take it private?
An offer does make sense. It's just who's the right buyer for this offer. We've all seen what's happened before, whether it's real estate or it's splitting off e-commerce. But what's inherent about Macy's, they're close to the customer. You look at their doors they have, and they've pruned their doors over the years. They're now at around 784 in total. And who wants to be closer to the customer? It's got to be a strategic, I think, that makes sense.
Okay, so if you were to take this company private, are you doing it because you want to be able to do things that you couldn't do as a public company, invest more in getting closer to your customer? Or are you doing this because you want to harvest? And this is still a cash flow company. You want to take and harvest things, pay as little as you can to keep the stores open and milk it for all it's worth. What happens?
I think it's the first. I think there's things you want to do. I think look what they're doing with investing in private brands. Look at the small format strategy they're putting in place. Look at digitization. And they're doing this in the face of a consumer who's under pressure. So it's hard to get a multiple and evaluation if your top line's not growing. And that's what investors want to see. Investors put multiples on names because of growth. And right now, top line is more stagnant.
So are these investors, I don't know these guys, are these investors who you think are in it for the long haul and really want to be there? They're not somebody that's like a private equity type thing where you take and flip it?
Certainly feels like I don't know them either. I haven't met them, but when they said it's about the real estate, you need strategics who's also about the operations, given the framework this company has.
Yeah, and they say that, they believe they can line up the financing. That's obviously a question. And, the offer came December 1st, right? And Macy's board didn't see the need to necessarily come out and say they got the offer. But in terms of what you think the company, in the absence of a bid, needs to be doing more of right now, because you mentioned department stores don't get much of a multiple. They're kind of valued as, no growth runoff type businesses. So what should Macy's be doing kind of regardless of an offer?
I think what they've done in terms of pruning the stores and continuing to do that, sell off some of the stores that don't mean as much and invest in where the traffic is, certainly with the hybrid and outdoor malls, and they're getting same store sales that are above the average in those stores.
I agree with her as well. Macy's has failed to adopt to a model that ultimately has allowed them to thrive in the e-commerce space. I mean, Macy's is a pretty iconic brand, especially with middle-aged women, but they haven't adapted in the way they needed to adapt to really make it a consumer-facing product that was going to thrive in the Amazon e-commerce world. I mean, I would argue that their Black Friday sales were probably not as good as independent merchants on a platform like Shopify, for example, if you just amalgamate all those merchants together. So from that perspective, Macy's probably deserves to go private. I mean, this is the ruthless nature of the equity markets. If you're not performing for shareholders, you're going to get offers either by activist investors or private equity firms to take you private. Macy's right now up 15% in the pre-market at $20. So it was funny because Steve was talking to me about Macy's a while ago, and we thought it had a potential just to because it was so undervalued, but because it obviously has gotten beaten up. But Macy's hasn't been able to perform, and now they're going private, which might be the reason for why their stock actually starts to get some momentum. So that's some of the news we got on Macy's. Let me get to another piece of news right here real quick. Thank you 605 people for being here. Apple. Let's talk a little bit about Apple. Anthony, what is Sears? Dude, I went to Sears so many times when I was little. Sears was like a big place for me, but Sears is now, not really in business anymore. So Macy's kind of the same thing right there. Apple, Dan Ives raises his price target on Apple. I'm really curious what people think about this one. We are raising our price target on Apple from $240 to $250. That would make Apple a $4 trillion company by the end of 2024. So Dan Ives expecting decent 20% year-over-year gains for Apple going into the end of 2024. He believes a couple of core things. Services growth is not slowing down. Obviously, there's billions of people that have iPhones, and they would pay $10-15 a month for a variety of different services, app store fees, right? All that stuff that contributes to the Apple's growing ecosystem that they can monetize. Number two, the Vision Pro, introducing a new ecosystem for developers, VR and AR. Vision Pro, likely this $3,500 model is going to sell, but it's going to sell to the developers and to the people that really want, to be the first in line. But it's probably going to be closer to $1,500, $1,200 by the next year or end of 2024, where we're going to get a real consumer model. And by then, the thesis around the Vision Pro will be tested out. and be in place. And Apple will have an AI app store, further monetizing new AI-enabled apps in the VR AR ecosystem, something Dan Ives says is likely going to happen. Remember, Apple is right now, let's look at their PE. They are, I believe, the most expensive big tech company out of the Magnificent Seven. PE is at 31. Ford PE at 29. Right now, Apple 194 in the pre-markets. Apple at all-time highs, $3.04 trillion. Dan Ives thinks that in a year, they can get another $1 trillion of market cap. That's how bullish he is on Apple. So they have expanded their iPhone production in India, which is a really good news around Apple, right? Taking that moat they had around large-scale supply chain productions and trying to diversify it from China, bringing it to India. I think that's obviously going to be beneficial for them, given some of the geopolitical uncertainties we're seeing in China going over the next decade. However, the question simply becomes, the reason we saw the head of design leave Apple on Thursday, which was a headline a lot of people forgot to talk about, is because this iPhone has not really changed. It's looked the same for a long time, right? And so I don't even blame Apple when I see the iPhone not changing at all, because I'm like, look, I don't know how much more you can innovate on the design. Like it's a screen with a touch screen, right? Like maybe you can make the camera a little better. That's why I upgraded my iPhone after 3 years. It's been a long time since I upgraded. I don't blame Apple for the lack of innovation in the iPhone like a lot of people blame them for. However, that does mean in the stock market, I mean, if you're not going to keep innovating, you're probably not going to be able to accelerate and accentuate your returns, which is okay. The Vision Pro maybe has a chance to do it. I don't really believe in VR, but I guess there will be a subset of the population. I don't think 2 billion people are going to be using it every day like they use the iPhone. Services is where they can monetize the iPhone, and I think that's fine. But does that mean they can add trillions of dollars the way they've been doing by selling massive levels of hardware like iMacs, iPads, laptops, etc.? I don't know. It's going to be very hard for Apple to keep innovating on that, because some people are just not going to want to buy it after they keep using it the way they use it. Remember, Apple's growing at 2% year over year. So that's why Bay Racing, that's expensive. You're paying a 30 PE for a company that's basically not growing. However, this is a company that has bought back $630 billion of shares since 2012. Every month, Apple is buying back $7 to $8 billion of shares in the form of just on the open market share buybacks, which is kind of insane. I mean, like, to buy back they have so much cash, they can return so much to shareholders just by buying back their own shares, that they can obviously artificially engineer their EPS to be way better than what the market expects it to be, because that's just how big of a company they are. The question is, where is the next S curve of growth? The other thing is the car. That car, I don't know if it's under works or if it's still happening, but that car theoretically was going to be like the next evolution of Apple. Like, imagine, getting into your car, self-driving, your iPhone's there, everyth's connected. I don't know if Tim Cook's going to end up leading them to that level of the company, but that would be my next bet for what gets Apple to, the $10 trillion market caps over the next decade. Uncle Jesse says Apple is sticky. Who wants to reintegrate it in all their cloud onto Samsung or Android? I ain't got the time for that. I agree. I've had an Apple iPhone since 2010. I'm just never using an Android. I'm sorry. It's just not going to happen, right? Like, it's just my girl would probably dump me if I text her in green messages, right? Like, the social stigma, it's just not going to happen, right? But that doesn't mean they're necessarily monetizing me as much as they were before, when I was getting an iPhone every 2 years. And so I think that's kind of the issue for Apple. And honestly, I paid like $400 for this iPhone. I got it $800 off. So I don't think Apple even cares that much about making money off the phone. They just care that I keep using it so that they can monetize me in some way, whether it's Apple Music or Apple Health. The Apple Health stuff is something that's under talked about. Even for me, I have not done enough research. They are making a lot of innovations in regards to how they can build personal assistants to help you have better sleep, track your heartbeats, all that type of stuff. The Apple Watch obviously has had a lot of innovation there. I've never used it, so I never cared too much about it, but that is something that Apple has tried to innovate on, and probably something that's going to be bigger over the next decade. So that's what we've got on Apple. Rather Apple than Google. Well, that's interesting. Let's transition and let's talk about Google for a little bit. We got about 15 minutes until the market opens. Let's talk a little bit about big old Google. So for those that don't know, okay, this is my only big tech allocation. It is Google. It is the only thing that is my big tech allocation. So let me pull that up right now. I want to show you guys a couple things. Oh, wow. Yeah, let me do this news real quick, but right before we go to Google. Benny, thank you for this comment. Enphase is out of the NASDAQ. I think you are correct on that, Benny. Here is the breaking news right there. DoorDash, MongoDB are joining the NASDAQ 100. This was published 3 hours ago. Enphase, Zoom, and a couple other stocks are leaving. And eBay. Wow. Look at this. So DoorDash, Mongo, and Splunk will join the NASDAQ 100 index. eBay, Enphase, and Zoom are leaving. Oh, wow. That is interesting. So Enphase is down right now in the pre-markets. Enphase was at 110 last week. Enphase right now in the pre-markets. Yeah, there you go. Enphase down 3% on this news. Enphase got hit. Enphase, I mean, look, this was bound to happen. I mean, your stock can't drop 80% in a year and you expect to not get out of the index. So these things get rebounds all the time. Enphase could come back in, right? It just, they have to perform. Zoom is also getting cut. Zoom has had horrendous earnings. I mean, they're growing like 2% year over year. And that's obviously not good for Zoom. Zoom right now, $71, 2% of the pre-market down. Yeah. So these companies are leaving. Let me check Dash. DoorDash right now in the pre-markets is likely up, I would imagine. DoorDash. Yeah, DoorDash is up 3%. And then what's the other one? Mongo. Dan Ives is bullish on that one as well. Mongo is up 2%. So we've got some rebalancing. That is happening. For those that are just joining, Enphase, eBay, and Zoom are leaving the NASDAQ 100 index. DoorDash and MongoDB are joining. And this is because some stocks had, bad years. Some stocks had good years. Enphase in the S&P. I do not think Enphase is in the S&P. Enphase is only a $10 billion market cap. 14 billion. It'll probably be a little bit lower when the market opens. I don't think Enphase ever got added into the S&P. I know SolarEdge also got out of one of the indices a couple of weeks ago. So, yeah, I mean, look, that's what happens. And Enphase, I thought, was making a little bit of a recovery, quite frankly. I guess this news definitely hurt it a lot going down into leaving the NASDAQ 100 index. I'm surprised we didn't know that. I feel like this is not new news. Usually they publish this before it happens, but I guess this is news that shocked the market this morning. Okay, let's get into Google. Google's down 2.4%. So I did some due diligence on Google this weekend. Okay, Google is my only big tech allocation. I don't own any. Well, I own a little bit of Tesla, but it's not a lot. I would say it's a major allocation. Google is really my big 7 out of the big 7 picks. I didn't pick Apple. I didn't pick Meta. I didn't pick Nvidia. I picked Google. Definitely didn't pick Microsoft. I think Microsoft's a little bit too, valued too nicely. Google, and from a valuation perspective, I think is probably the cheapest. Now, Google, apparently they came out and they admitted that they faked the Gemini video. Now, and fake is a harsh word, but they made the Gemini video stitched together in a way that wasn't really accurate. Okay, it's like, it's like when your teacher was like, "Did you really do the homework? Did you copy out of it?" It's like, we didn't copy, we just shared the homework to be able to come to a conclusive answer. In fact, my cousin who came from India and was in college in Massachusetts, don't make fun of me of how I say it. I can't say Massachusetts correctly. I don't know what happens with my lips. I just can't say Massachusetts. It's whatever. It's Massachusetts. She collaborated with one of her partners on an exam, and she didn't cheat. She legitimately collaborated, but it looked like she cheated. And dude, they were about to deport her ass back to India. Like, that professor was not having it. He was like, "You cheated. You're leaving this college. You're getting expelled." And she was like begging him to be like, "Dude, I did not fucking cheat. Like, I don't know what to tell you." Eventually, she ended up, getting away with it and not cheating. I make fun of her every time I see her. I'm like, "So you cheated?" She was like, "No, we collaborated." I'm like, "No, motherfucker, you cheated. Like, it's okay. You can say you cheated." But she almost got deported back to India, which is like, dude, if you're a foreign exchange student, you cannot get expelled. You cannot be plagiarizing. That shit will send your ass back home. She's okay now. She has a nice, comfy tech job in California, so she's doing well. But it was pretty scary for a couple months. Google, the reason the market brought it down about 3% is because this Gemini video is not real. In fact, a lot of people are saying this Gemini video is very similar to GPT-3, which is not that exciting because we've all used GPT-3. Now that we have GPT-4, it's a lot better. The whole nature of Google's Gemini model was that it's multimodal. And so in the video, when he's talking and it's immediately happening as he's talking, that shit's fake. He's not saying, the guy's not saying something and Google's not reacting immediately. There's like a 7-8 second delay, and Google, you can do jump cuts. They just boop, they cut that part out. So it seems like it's immediate. It's not immediate. And so Google had to explicitly clarify that they had altered the video to be able to make it more reasonable to consume, AKA they cheated, right? So on the video. Now, granted, does that matter that much? No, I don't think it's that big of a deal. At the end of the day, if Gemini is going to get widespread use by developers, they're going to be fine. Also, in terms of the stock, Google's going to buy back a shit ton of their stock. So even if you don't believe that the Gemini thing is that exciting, their price is going to go up naturally over the next couple of years because they're just going to buy back a lot of stock. The problem with Google is that if Gemini does not get widespread use cases with with developers and they're going to continue to use OpenAI's API, then OpenAI's API is just going to plug into their large language model and bring startups a lot of new revenue and a lot of new excitement in terms of being able to bring their products to market. Gemini should be doing that, right? So if startups want a different LLM, for example, Palantir's AIP could be plugging into Google Bard along with Llama and GPT-4, et cetera, to sort of amalgamate all these different LLMs that could then be used by an organization via AIP's like security and governance platform. But if Bard's not available, if Google's LLM Gemini is not real, then those platforms can't use Gemini, which means Google can't sell more cloud computing, particularly AI cloud computing, which is the big sector of their growth. Until that happens, it's going to be tough for Google. When it does happen, I think it'll reflect in the earnings, but Gemini's still not available yet, right? It's still like in the beta stages of being released. And until it's released, I think the market is really scared about what's going to happen with Gemini. When you contrast that to Microsoft, which has $1 trillion more of market cap, which is why I don't like Microsoft as a buy right now, it doesn't seem like they're slowing down. By any sense of the imagination, Microsoft right now 370, high of 384, 2.78 trillion versus Google at 1.69 trillion. Microsoft at a 33 PE, Google at a 23 PE. Google's the obvious buy versus Microsoft. If you just look at their growth rates and their fundamentals, their growth rates are not that far off either. And Google has a monopoly in search. The two bear cases for Google is if that monopoly starts to decline and Microsoft starts to take a little bit more with their LLMs and ChatGPT, that's bad for Google because Google has everything to lose. Microsoft has everything to gain. And then on top of that, if Microsoft can sell more AI cloud compute along with more API calls with OpenAI, and Google doesn't have any part of that, in their revenue, Google makes $44 billion off search ads. If that starts to decline and they don't have any other forms of revenue that can start to make up for that, then Google's in a tough situation no matter how many shares they buy. I don't think Google is going to be in a bad situation. I think Google's going to be fine, but it is going to take some time, I think, for the market to recognize, Google's moat here until they get this model out and, people actually start using it long term. So let's see what else we have. So that's what we're having on Google. Are the companies leaving or were they dropped? They were dropped. So those stocks did not perform this year. That's why they were dropped. You're talking about Enphase, Zoom, and eBay. If those companies obviously did not have a good year, then when the index rebalances, they have to put in companies that did have a good year. eBay is down 2% year to date. So in a year where a lot of things ran, if you didn't run, that's bad. Enphase year to date is down 59%, and Zoom year to date is up 9%, which is okay. But obviously Zoom, was at $500 at one point at 73. It just needs to be a little bit higher for the market to get a lot more excited for Google. Perry says, why has nobody ever asked the question about Google? If Google's biggest revenue is based on search ads, how much will they use if you use ChatGPT and specifically ask it to give answers with no ads? I think, Perry, this question has been asked and answered, which is that ChatGPT has been out for the past 9 months and Google search ads were up 11% year over year in the last quarter to $41 billion. So ChatGPT has not taken away market share. In fact, Google search ads are growing, right, year over year. Until we see an actual decline in search ads, we're not going to think that ChatGPT is taking away any of that revenue. The market is worried that that's going to happen sooner than later. I don't think that's going to happen. I think most people still don't care about ChatGPT. Most people still use Google. Obviously, Apple, default browser, Google. It's likely still going to be fine. But the first quarter we see negative growth on search ads, that's when I think Google is going to be in a tough situation if they don't have an answer. Because if they don't have an answer for their ad business to survive, the market's not going to be excited for Google. So we'll see when that only happens. But as of now, Google, I think, is going to be fine. Bitcoin, 41,874, down 0.72%. So we're down below that 42,000 level. Coinbase down 4%. Marathon down 6.3%. Riot down 5%. Bitfarms down 10%. Hut 8 Mining down 6.5%. We're seeing a lot of decline in the Bitcoin companies. CleanSpark down 8.12%. If we go to Robinhood down 1%. Robinhood down the least out of the companies that are correlated with Bitcoin. One of the reasons I like Robinhood, again, it's an actual business outside of, just being based on crypto, even if crypto is a catalyst. So Robinhood is down. I expect Robinhood to probably be down a little bit more this morning. Just because it was up, because Bitcoin was up, it's going to be down if Bitcoin's down. So we're probably going to have to deal with some of that volatility as we get into the market open in 6 minutes. Tesla down 0.02%. Tesla's been holding up really nicely at this 243 level, to be honest. I mean, it hasn't collapsed below 234, which I believe was the bottom, or 233.9 was the bottom. Elon Musk was at an interesting game this weekend. He was at the Army football game, apparently. And so he was there. He tweeted, let me just show you this picture. Interestingly enough, this picture got tens of millions of views, and Palantir's logo was in the background. As you can see right here, Palantir was one of the sponsors of the Army football game. Elon was here. This got 35 million views. I'm not saying 35 million people know about Palantir now. I'm just saying it's nice to see, you know, this is why you sponsor these games, because of the coverage you can get. Elon there with his son, X, I believe is his name. They call him Little X, but his name is a little bit longer than that. But there he is on his shoulders. The interesting thing about Elon this weekend is he was in a Twitter Spaces with 100,000 people with Vivek Ramaswamy, Andrew Tate, Alex Jones, who is now reinstated on Twitter's platform. Elon said, hey, should we get Alex Jones back on the app? And he said, whoever votes, if people vote for it, he will put him on the app, and people voted to put him on the app. And so now he's there. And Jason Calacanis, there was a bunch of other big names that were on the Twitter Spaces, but it was kind of insane seeing 100,000 people on those Twitter Spaces. As you can see right here, 1.9 million people voted. 70% of them said reinstate Alex Jones on the platform. 29% of them said no, do not reinstate them on the platform. Remember, the reason he was taken off a couple years ago was because of his comments around the Sandy Hook shooting. So Alex Jones has been suspended from a lot of platforms for a while. Twitter is, I think, the only platform in the world where he's allowed to even start creating again. Elon has let him back. And so that Twitter Spaces went on for a couple hours of just a lot of people talking a lot about free speech and things of that nature. So you had a lot of people on that Twitter Spaces discussing different stuff in the world of politics and pop culture. Vivek Ramaswamy, it was actually funny. He was taking a piss while his mic was open, and so people could literally hear him pissing. So, I mean, this is the stuff that was happening over the weekend. I mean, this is why Twitter is like, you got to be on Twitter. I mean, there's definitely a lot of stuff going on. It's definitely exciting, but it's also a lot of stuff going back and forth on Twitter. One person said, Douglas says the only football game TV on Saturday, millions of impressions were there. Their logo was all over the Army Navy game. Yeah, look, I think it was a good thing by Palantir to sponsor the Army Navy game. In general, I don't think sponsorships and being on a billboard is that important for brand awareness. Maybe I'm being stupid here, but I think if Palantir took, like, for example, maybe they paid a couple $1 million to be that sponsor. If they invested that couple $1 million in a different type of marketing, I think it would be more effective than being on a billboard on the Army football game. Now, granted, I understand why they did it. The Army, they support the Army, right? Honestly, they probably had to do it just because, to get future Army deals from the government, they would be like, hey, you don't even sponsor our football games. Why would we give you a deal, right? So it's more of a like, I got to scratch your back type of thing. But in terms of the raw impressions, I don't know if the millions of people watching that football game actually are going to inquire about Palantir. Honestly, I think that if they put it into Twitter advertising, it would do even better, quite frankly. That's my take on how I think about advertising writ large. But I think because it's an Army football game and not an NFL football game, and Palantir is, coincided with the Army and the military, they probably did need to do that to be able to get continued awareness. The SoFi Stadium is insignificant. No, I think the SoFi Stadium is significant because the SoFi Stadium is the name of the stadium. Palantir's logo being in the back of a football game, I'm not bullish on that writ large for advertising. I just don't think for advertising that's that big of a deal. Palantir right now up 1.8% in the pre-market. However, because it's the Army, I get why they did it, right? But in general, I don't want to invest in a company that's like sponsoring a billboard in the back of a football game. I just don't think a lot of people care that much about that, especially because they're not a consumer brand, right? They're not Tesla. They're not, people, when they look it up, they're going to see B2B enterprise software. Most people are like, what the fuck is this, right? So you got to be a little bit more different with your go-to-market approach from Palantir. Granted, I get why they did it. That's why I'm not criticizing for him for it. But, I don't know if that many people cared about them being in the background. SoFi Stadium is huge for the brand. Nobody else would know what it is. No offense. I agree. For SoFi, it's definitely something that they needed to do. All right. So what do we have? We got about a minute until the market open. We got writ large counter twice already. It started so far. It'll be really interesting to see how the market opens. Palantir right now up 2% of the pre-market. Bitcoin, we saw a nice little 5% decline over the past couple of hours. So a lot of these Bitcoin companies are going to open down. SoFi right now, $8.13 in the pre-market. We're going to see how big tech opens. Google not really recovering from them cheating on their Gemini video, down 2%. We're going to see how the market responds to that. And the S&P 500, 460. Look, we hit a 52-week high on the S&P 500 on Friday. The market rallied very nicely on Friday, so it'll be really interesting to see how the market comes down or how the market continues to go higher on this December 2nd week of trading. Abbas says, why is the Army playing football with advertising? It's like an annual game that the Army does with football. It's one of those things they do every year. It's part of like their culture and stuff. And that's where they get a ton of sponsors that are in the defense space to, sponsor that game and get some brand awareness. So it makes sense. It's really like an America thing. That's why Elon was there. And he said, God bless America, all that stuff. But nonetheless, hopefully it was good for Palantir to at least get their name and their logo on that game. All right, here we go. 9:30 a.m. December 11, 2023, second week of December trading begins. Let's see if the Santa Claus rally continues this week. Ladies and gentlemen, the stock market is once again open. Wake your ass up. Here we go. What do we got? It's time to get in to the market open. S&P 500 opening up not that bad. We're seeing it right here, 459.76 down 0.08%, basically flat for the day, so not too bad. Google down 2.39%. We're seeing Google come down. Obviously, that Gemini video did not have the market excited, so now we got Google coming down. CleanSpark 9.38%, folks. We're seeing CleanSpark on a bit of a decline. 10% in a day is bad because, Bitcoin's down. We got Robinhood, or not Robinhood, MicroStrategy down 5%, Coinbase down 5%, Marathon down 8%, Riot down 7%, Bitfarms down 12.55%, Robinhood down 2.2%, but 1145. Not too bad right now on Robinhood, but we're seeing it come down right now here on Robinhood, down about 2% on the day. It was at 1194 on Friday, right now down at 1140. Palantir 1787. Wow. So Palantir opened below 1800 or $18. Palantir was at 1812 right before the pre-markets, or right before the market opened, around 2 minutes before. Right now it's 1790. So it's green, but it definitely got sold off into the market open. So it is down for the day, even though it was up. CleanSpark now down 11%. Google down at 133, AMD at 130 up. AMD's up from 118 last week, so AMD up really nicely. Hut 8 Mining down 8.9%. Bitfarms down 15%. Goodness gracious, down 39 cents on the day, $2.20. Coinbase down 5%. Marathon down 9%. So Bitcoin companies are down. SoFi at 812. SoFi basically flat on the day. SoFi not having any crypto exposure anymore because at the end of the day, SoFi is, not part of crypto anymore. They're not allowed to have crypto assets on the platform, and they gave that up for the banking regulation. So it makes sense why SoFi is not correlated with them anymore, but we're not going to see too much momentum with SoFi and crypto. Microsoft 366, Microsoft down 2%, Google down 2.5%. Meta, let's check on some of the other big tech companies. Meta is down 1.74%. Nvidia is down 1.3%, and Tesla is down 0.8%. Big tech is down, and so we're seeing some momentum go to the downside there. iShare Russells are also down. So the Russell ETF, this is had 40% more call volume than it had in the past couple of months. They are down a little bit. Russell shares, these are small cap companies, have been up only 6% year to date. So as a result of that, a lot of people are expecting that small caps are going to be the next to rally. We haven't seen too much of a rally from them, but they are down right now, $186, 0.19%. PayPal 59.30. PayPal basically flat on the day. Affirm at $42. I did not expect Affirm to keep running. Affirm was at $13 a couple months ago. Right now, Affirm is up 80% for the month. Just absolutely insane for Affirm. So not bad at all. If you have Affirm, holding on to this. Buy now, pay later, obviously doing very well. I think it's a little bit too much for buy now, pay later. I don't know how much Affirm's earnings are going to reflect Black Friday and Cyber Monday sales on buy now, pay later, but nonetheless, the market is excited for it, and the market giving it up. Affirm's still only a $12 billion market cap, even though they have rallied about 80% year to date. CrowdStrike is flat for the day. Salesforce 251, that's green a little bit. Amazon 144. That's a little green. Overall, we got a bit of a red market. Truist, nice little rally on Friday right now, 34.26. Truist is also red on the day, down 0.17%. NASDAQ at 14,346. NASDAQ opening down about 0.4%. Shopify is green. Adobe is green, back at 618. Adobe was at 590 about 5 days ago. So Adobe getting a little bit more momentum. And in Intel at 43 as well. Where is Palantir? Let's take a little look on that. If you are just joining, we had a Canadian pension fund sell about 111,000 shares of Palantir. That news broke this morning. Palantir touching $18, up 1.29% on the day. Alex Karp in that recent interview says that he is seeing unprecedented demand for AIP, and that's why we're seeing a lot of momentum when it comes to AIP growth as well. One thing I wanted to share in regards to Palantir that I thought was really interesting, a lot of people missed this last week, and this is something that I think is really, really important to understand about why their go-to-market strategy is working and why their demand is continuing to go higher, is because of this picture right here. This is on the Daily Palantir newsletter. If you are not subscribed, dailypalantir.com/subscribe. Newsletter every single day, about 5 minutes for you to read. Really important stuff. This was on the newsletter last week. Snowflake, here's what they put on LinkedIn. Elevate your skills with part 1 of our LLM bootcamp. Join us over 2 days to delve into the world of generative AI on Snowflake. Look, this, I mean, if Snowflake is deciding to do boot camps, and look, I'm not saying boot camp is a term Palantir came up with, but I have not seen any SaaS companies say the word boot camp or try to brand that word in any meaningful way. I mean, Palantir was the first company to do this about 3 months ago, and we saw the success they've had. I think other competitors have recognized, oh, wait, if Palantir is getting companies to buy their product using these boot camps and not have to have people, sell and message on LinkedIn all day and have what Karp calls steak dinners, maybe there's something to this boot camp approach that is actually working. We saw Shyam Sankar a couple of days ago say that they've done over 325 boot camps with organizations over the past couple months, and going into 2024, you imagine that's going to scale by 10-20%. And Karp on the latest interview said, we have unprecedented demand that we can't keep up with. My question is, does the demand materialize into revenue in Q4? Maybe it does, and then Q4 is a blowout quarter. More likely than not, I think the demand will materialize towards the latter half of 2024. They're still going to have to monetize AIP, but the customer count will start to go higher. And if that customer count is going to go higher, remember, they got 2 customers last week. Fujitsu, they extended their partnership for about $40 million, technology consulting firm in Japan. And then HISA, the Horse Integrity Safety Authority, which is basically an authority that makes sure that horses, when they're racing, are taken care of and they're healthy on the races. They're using AIP to operationalize their workflows and enable AI in their enterprise to make sure that they're more efficient, which is just insane. Palantir is starting to get a lot more of these deals. I don't know if they're monetizing those deals yet, but seeing a competitor like Snowflake say, hey, we're going to do boot camps as well because we think boot camps are effective, that to me just shows that Palantir's go-to-market is honestly phenomenal. And it's the most Palantir thing in the world to be able to do boot camps versus having to sell. Alex Karp never wanted a sales force. He never wanted this massive, part of the organization that was just dedicated to selling. And so he got what he wanted. He ended up creating a go-to-market strategy. I don't know if he did or the company did, but he's, spearheading this to be able to sell without having to actually sell, because the boot camps are just showing the product and the product is selling itself, which is really the most Palantir thing in the world. And that's why we're seeing some momentum on Palantir and their go-to-market strategy. Palantir, $18.04, up 2% in the pre-market or in the market open. SoFi, $8.27, up 1.6%. Nice breakout from SoFi. We're seeing back into this $8.30 range. Hopefully, if we can close above that range on SoFi, that'll be really good. S&P 500, $460 as well. Basically flat. So, even if we end the year at 460 on the S&P, Tom Lee thinks we could even run to about 470. This is really good for the S&P because we've had a monster rally this year. To end the year at these levels and to not sort of break below that 450 level and then start to head lower to the 440s, that would be really exciting for the S&P 500. Robinhood recovering a lot of its gains. 1163 right now is at 1140 right now. Robinhood 1163. Ride is down 12%. Bitfarms is down 12%. Ride down 9%. Marathon down 9%. Coinbase down 3.69%. So Coinbase recovering a little bit of it. Hut 8 Mining down 10%. CleanSpark is down 10% as well. Where is Bitcoin? Bitcoin at 41,920. So close to that 42,000 level, but not all the way down to where it was last night. Last night it was closer to that 40,000 level. Meta at 322, Nvidia 467, Tesla at 241. And where is Palantir? Palantir at 1806, up 1.6% on the day. Not bad at all for Palantir. That is the most Palantir thing they could do. I love it. Yeah, I was thinking about it this morning. I was literally the most Palantir thing they could do is not have to hire a sales force and do what, the market wants them to do, but actually just sell their product in a way that is a go-to-market product-oriented approach. So I thought it was really exciting to see Palantir do this. And obviously, Karp talking about AIP demand, we're seeing more and more of that happen. Let's get an update on Bitcoin. Here's why there's going to be additional demand pressure going in to the latter half of the year for why Bitcoin could move higher and why, as a result, the market could move higher as well.
This has been an impressive run, no doubt about it. But how much of this is tied strictly to this idea that we could see at least an ETF or multiple exchange-traded products with cryptocurrency in the coming 2024?
Yeah, Dominic, I think a little bit of the recent moves, maybe over the last month or so, certainly reflected some enthusiasm about the ETF approval, which we expect that first week of January. Which I'll predict January 8th, crown the king on the king's birthday. But I think most of the rise this year has really nothing to do with the ETF at all. We were very depressed a year ago, really bad bear market following the FTX scandal, and the markets were really washed out. far below fair value. Fair value at the time a year ago was about $32,000, $33,000. When you do a Metcalfe's law, Metcalf value for the network. And that fair value has drifted upwards into the low 50s today. And the price has just climbed relentlessly over the past year to get closer to that fair value. As we head into the new year, we've got the halving in April or May of next year. That's exciting. That'll put additional demand pressure on Bitcoin. And as we enter, crypto fall next June, things could get very exciting. So we think the market's just getting warmed up here, Dom.
So Bitcoin.
And see, this is, the more I research this, and you guys know I've not been the most bullish on crypto, the more I'm trying to understand this argument at a deeper level. I think he's right. Either all of us are wrong and this is the top of a rally and we're going to see a massive liquidation and like Bitcoin's falling back down to 25,000, or there are a lot of events coming up in the future that are going to keep Bitcoin at this level, particularly the halving event and the ETF approval. Now, that ETF approval, a lot of people have said, well, if the ETF happens, it's going to be a sell the news event. I don't know if that's necessarily the case. The whole point of the ETF approval is that there's going to be more exposure that institutional investors, pension funds, et cetera, can have to Bitcoin because, a pension fund can't buy Bitcoin on Coinbase. They have to buy it through the stock market, and they can either buy derivative Bitcoin companies, but it's incredibly risky, right? Because Bitcoin can go up and down, or you can buy an ETF that's a bit more balanced. And so if all that demand side pressure comes in on the ETF, that just means more exposure to Bitcoin, which means more people would be excited to own a little bit more of Bitcoin. And that would be very good in general. So at the end of the day, I don't really see the argument for why we're at a top on Bitcoin, given some of the catalysts that are happening, unless this is just one of those things that no one sees, and we have massive liquidations happen. Last night, it was 10 p.m. I was just on my phone and I saw Bitcoin fall 5% dramatically. I mean, when you see stuff like that happen, you start to realize, oh, people actually could just sell and people could take their profits, right? If they're holding on to a lot of money. But on top of that, there's also a lot of algorithms that have limit orders that are ready to buy that dip as soon as it comes down to that level because they believe in the long-term thesis of Bitcoin, especially going into 2024. A lot of people saying all-time highs in the 2024 are happening. And so if that's the case, a lot of companies are going to do well that are correlated with Bitcoin, and Bitcoin itself is going to do well. So we're going to end up seeing what happens in general. May 11th is the date I saw. I think it's April. April 2024 is when I see the halving is going to happen. You could be right that it's May 11th, but that April-May time is likely when we're going to see some of that Bitcoin momentum continuing to happen. Bay Ray says, I saw the Cybertruck in person back-to-back a couple of weeks ago. It was amazing. Yeah, I mean, I talked about on the channel, a bunch of people I know, they saw the Cybertruck in person, and now they're bullish on Tesla because they're that excited about that truck. I think the problem for Tesla is that they don't have an upcoming catalyst that is massive, which is why the stock has been kind of flattened in the gutter over the past couple of weeks. That Cybertruck was the catalyst, and then the catalyst kind of just faded out, and we're not seeing any more momentum there. But until we see that momentum on the Cybertruck, it's going to be harder to see it continuing to go higher. Let's get another take from our good friend Dan Ives, who's on CNBC on Friday. Speaking around why AI in 2024 is going to be a bull market. For those that missed it, Dan Ives has increased his price target from $240 to $250 on Apple. He is incredibly bullish going into 2024. Tom Lee also $5,200 price target on 2024. You know what? It could be a very simple argument in 2024. AI shows growth. Growth means these companies that are up so much year to date continue to go up simply because of the fact that AI is continuing to get them to grow. So here's his thesis on 2024.
And I believe this, in my opinion, Brian, this is the start of a new tech bull market that's going to rip higher into 2024.
Goldilocks was in with three bears. And I'm not exactly sure what happened. We never figured out what happened to her ultimately. If you had to flip it, and I know you're bullish and you've been right. If you had to flip it and say, okay, there's always things to worry about in the market. What are those things that are kind of lurking around?
I mean, look, I think from a macro, obviously, baking in Fed cuts into next year, is there some sort of exogenous event that ultimately hurts spending from an enterprise? Does AI ultimately hit the promise that we believe? Because I think so much of this rides on this AI revolution.
Yeah, and I think the issue, Dan, I don't want to put words in your mouth, sorry, is everybody's like, oh, AI is amazing, but has anybody figured out how to make money from it yet?
Well, I think that's the important thing. We've talked about this, that we are seeing use cases explode. I think it started with the godfather of AI, Jensen, NVIDIA. You look what's happened, Redmond with Nadella.
This is really important as well. When he's saying use cases are exploding, if there's no use case for AI, there's going to be no revenue. So the research that Wedbush is doing is like, no, companies actually have use cases for this thing, which is why the demand should be a byproduct of why companies actually want to use it.
They continue to lead. Now Google, of course, with Gemini. This is really, in my opinion, it's a 1995 moment. It's the biggest transformation we've seen in 30 years. That's why I think the bears go deep into hibernation mode. And I believe it's the start of a new tech bull market.
And fair enough, but you're describing how Google and Microsoft through OpenAI and others are going to make a lot of money, but those companies already make a lot of money. Is there going to be any halo effect other than NVIDIA, Microsoft, Google?
Well, I think the tidal wave of spending, it's now going to hit the shores of tech. Palantir, MongoDB, Snowflake. I think Salesforce.com. You look at even how Oracle is going to monetize it. That's where now it's going to hit the rest of tech. I think that's what 2024 is about. And that's why you're now seeing a short covering for the ages in tech that's now going to lead into a fundamental case. I think this is a soft landing, and it's really setting up for what I view as a bull scenario going into 2024.
All right.
Okay, we'll get back to that clip in a little bit, but a couple things I want to talk about. Number one, let's do a little bit of macro analysis based on what he said. He said we're in a Goldilocks zone, okay? What does a Goldilocks zone actually mean for the market? The way I understand it is there is a perfect set of catalysts and essentially macro indicators that are allowing the economy to do well, and as a result, the stock markets also do well as well. Now, what we saw last Friday was a jobs report that was really interesting. We added 199,000 jobs, and the unemployment rate, instead of being at 3.9%, fell to 3.7%. Why is this a Goldilocks zone? Because the unemployment rate falling to 3.7% is amazing. That means people have jobs, even though job openings are down from 9.3 million to 8.7 million. 8.7 million, still a lot of jobs that are opening, giving competitive pressures for wages. So wage price inflation is not going that higher if you have less jobs. But the unemployment rate going down to 3.7%, absolutely amazing. People have jobs, people have money, they can spend on different things, consumer strong. That's point A. Point B, which is why the market has been upset with a low unemployment rate, and the Fed, Jerome Powell, has been very upset with a low unemployment rate, is because inflation starts to tick up. Because if people have more money, they spend more money. If they spend more money, prices start to, right? Like that whole scenario happens. Well, inflation's coming down. In fact, we're getting CPI. I'll be live at 8:20 on Wednesday instead of 8:45 as usual, because 8:30 we got that CPI report coming out. Last CPI was 3.2. I think there is a shot that we see 2.9 on CPI. And remember, the Fed's target is 2%. So that means we're 0.9 away from getting to that target, which is going to be difficult to get to. But we know energy has fallen off a cliff. I mean, oil prices right now, I think, are below, they're in the $75 range. They're definitely low. I'm seeing my oil prices in New Jersey. Yeah, it's at $70. Brent crude is at 75. WTI is at $70.99. My oil is not above $2.93 here in New Jersey. I know California, you got to deal with California stuff. But, in the Midwest, Texas, you're seeing oil down to that 270, 260 range, which is really good. Oil is going to come down. Energy is going to come down. On top of that, shelter, which has been one of the largest lagging indicators, that's coming down a bit, even if it's not fully coming down in this report, which means we're going to see CPI come in lower. The Goldilocks zone is everyone has a job and they can buy shit, and inflation is coming down. That is Goldilocks, because inflation is not supposed to be coming down if everyone has a job. But if it is coming down, which means you don't really need interest rates to be as high as they are, you could theoretically cut interest rates. People could still have a job. Inflation could not accelerate. And then you're just in this euphoric mode where the market has no reason to necessarily be upset. And then stocks go up. On top of that, if you got crypto, that's also helping as well. Now, that is the Goldilocks zone. And then you've got AI being sort of the overarching catalyst to be able to accelerate growth. And that's what, the market can get excited for. The bear case to that Goldilocks zone is that unemployment is actually going to start to tick higher, because the report that we saw was because of seasonal workers. We saw some of the SAG actors and automotive workers start to get their job back. So it was a sort of artificially inflated job report, which means 3.7% is not the actual real unemployment rate. We're actually seeing a lot of businesses start to shut down. Small business bankruptcies have gone up 20% year over year. We are seeing more business. I mean, Spotify laying off 70% of workers, like 17%. That's almost 20% of your workforce. Like, there are companies that are establishing layoffs. So if we see those layoffs start to accelerate, we see businesses start to shut down, and we don't see a reason for the Fed to be not stubborn on their 2% target. So, for example, everyone, including Bill Ackman, is targeting a 2%, or sorry, a March cut on interest rates. Well, if we're still at 2.7, 2.8, 2.65% by March on inflation, why is the Fed going to cut? Like, there's no reason, right? And I actually agree with a lot of the sort of bearish analysts that are out there that even though they're bearish, they have a very good point, which is that there is no reason for the Fed to cut. Like people really have to like hold on a little bit. The Fed is in no like dire need, unless the economy is collapsing, which if it is collapsing, then that gets rid of the whole Goldilocks scenario, to cut interest rates. Because if inflation is not at 2% and you want to maintain legitimacy, wait till it gets to 2.1, 2.2, and then maybe then you cut, which could be June, maybe July by 2024. Why would you cut in March and even give inflation the chance to reaccelerate? I don't think Jerome Powell is going to cut in March, no matter how many analysts are saying that they think he is, because I think unless there is something fundamentally broken in the economy, which we're not seeing as of yet, right? It would have to really be apparent, even if, Bill Ackman thinks the economy is slowing down, and yes, there is evidence of that, but it has to be more apparent. I don't think the Fed's going to do that, which means if the Fed doesn't do that, the question becomes, can the market rally into Q4 of 2023 earnings, which will be in the first couple months of 2024, in order for AI to have that much growth, which is where Dan Ives becomes really important in understanding his thesis, if the Fed doesn't cut rates. And so if the Fed doesn't cut rates because they don't have a reason to cut rates, then at the end of the day, the market might end up melting up, but it also might end up being flat or down because there's just not a reason for the Fed to get excited to cut rates. And so if you ask me right now, do I think the Fed's cutting rates? My answer would be no, because I think the Fed was very scared of inflation reaccelerating, even though we know that inflation is falling off a cliff. Now, the FOMC meeting, Palantir right now at 1798. The FOMC meeting is on Thursday, CPI on Wednesday. I think the Fed's definitely not going to raise rates on Thursday. That's definitely not going to happen. But I do think Jerome Powell is going to be the most hawkish he has ever been. I mean, I think he will literally try to get the market to understand that they are not kidding when they say inflation needs to come down to 2%, because he does not want any reacceleration of inflation. He obviously doesn't want to have to raise rates going into 2024. And right now, it looks like there's no raising of the rates at all. But if inflation ticks upwards on any of those metrics and it starts to affect core PCE, things are going to get a little tough. So I think he's going to be pretty hawkish, but I think the market's not going to believe him, and they're going to continue to buy stocks because at the end of the day, they believe that rate cuts are going to happen eventually in 2024, even if it's not in March. And AI is going to be the catalyst that accelerates more growth, even if inflation doesn't come down that dramatically. Robinhood 1157, Snowflake 193. Snowflake getting close to their 52-week high at 194 that they hit a couple weeks ago. Right now, $63 billion market cap on Snowflake. PayPal, $59.33. Enphase, nice little recovery. It was at $99, now at $103. Elf Beauty, $128. CRM, $252. CrowdStrike, $254. The rest of the screen is pretty much red. We got SoFi a little green here. Palantir, $18.05 is green as well. But we got big tech and a lot of these Bitcoin companies are red on the day. CPI is tomorrow. Oh, well, then I'll be live tomorrow at 8:20. My bad. I thought CPI was Wednesday. All right. I'll be live 8:20 tomorrow. CPI. It'll be a monumental CPI. It'll be bigger than it was last time because now we've had a rally and we've got to keep this rally. And if the only way to keep this rally is to make sure that CPI comes in pretty nicely. A couple of headlines I want to get through. China's inflation rate is coming in. Where is this headline? China's consumer prices fell by 0.5% year over year in November 2023, steeper than the 0.2% drop in the prior month. So we're seeing China inflation start to come down a little bit more. Another piece of headline, Turkey's unemployment rate. The unemployment rate in Turkey dropped to 8.5% in October 2023, down from a revised 9% in the previous month. Turkey having pretty bad inflation. Their youth unemployment rate was almost 53% in September. So seeing that unemployment rate come down to 8.5% is not too bad. Obviously, the United States doing pretty well at 3.7% compared to some of the other countries. European natural gas fell to below 37 euros per megawatt in December, the lowest in over 2 months, amid signs of muted demand and evidence of ample supply, which is really good. Remember the concern about 7 months ago was, if we have sanctions on Russia, how is the EU going to heat itself up in the winter? It's going to be a very cold winter. Seems like that's pretty much under control and not as bad as we thought it was going to be. And the Japanese Business Survey Index came out. These were large manufacturing firms that were indexed in terms of how confident they are in regards of business success. It's something that the United States does with CEOs as well. So this is more qualitative versus quantitative. And it shows that 54% of these Japanese in large manufacturing firms and the heads of these firms are pretty confident about where the economy is going to go. And that's a nice, good gauge to just understand where the economy is going as the CEOs, the business leaders of an economy end up having to, voice their opinion for where things are going. And I think there's do I have a chart on this one? I don't have a chart on this one, but I had a chart that I saw over the weekend showing that every time in the United States, business confidence from CEOs, C-suite executives was at an all-time low. We had a decline in the stock market. So it happened in January 2022. It happened in 2020 when we had the COVID collapse. And now going into 2023, business excitement for overall, where the stock market's going, where business is going, I think because of AI has enabled a lot of business leaders to be excited going into 2024. And as a result of that, it's not as bad that they're thinking. Not surprised. We just had Thanksgiving. That's also true. You can get people excited from that perspective. Let's take a look at Bitcoin again, where it's going right here. And then we'll be done for today. Bitcoin right now, Palantir at 1808. So Palantir, one of the only companies that's red right now in the stock market. We're seeing a lot of red. Green. A lot of companies are red. Bitcoin right here, 41,947. So Bitcoin maintaining this 41 level. If Bitcoin can stay, I think between 40 and 45,000 towards the end of the year, the market's going to be okay. If we collapse under 40,000, that's when you're going to see a little bit more red. MicroStrategy right now red about 4.82%. S&P 500 barely flat, 459.85. That's doing not too bad. AMD 131. Coinbase falling below 140 at 139. Robin at 11.55. Fubo down about 2.4%. Enphase 102. Elf Beauty is up 128. Meta 324. Nvidia 468. Yeah, so we're seeing a lot of red. Palantir's green. A lot of this because in general markets have done well over the past couple of weeks. So we're seeing a little bit of cooling off, but also Bitcoin coming down gets us to see a little red. Palantir at 1807, up 1.68% on the day. Ractoria says, man, I shouldn't have bought Google when it dropped 10%. The company's been nothing but a disappointment. I think Google down 10% will be a good buy. I don't think it is going to be a bad buy, quite frankly. I think it's just going to take time for it to play out. So maybe the opportunity cost of the capital is what is annoying, which I agree as well. But at least I think in the long term, Google has a big tech allocation. Given the PE, it's at a 23 PE, which is very cheap compared to the other companies. They're going to be able to artificially get the stock price up, even if it's through buybacks. And eventually the market will realize, like Google's not going anywhere. And so I think we'll have excitement, but it might take a few months until earnings to get there. Word of the day. Let's do word of the day, and then we are done for today. Word of the day is POV. Okay, that's a interesting word of the day. POV. The position of the narrator in relation to the story is indicated by the narrator. This is such a boring word, dude. We need a better word of the day. This is just trash. Word of the day. This one I pronounced right for sure. Here's this word. This word looks better from Merriam-Webster. It's quixotic. This is an interesting word. Okay, this one's not being reached. Let me see if I can pull it up. Quixotic is the word of the day on Merriam-Webster. This is not a word, it's an acronym. Yeah, it's an interesting word of the day. Okay, I'm just looking it up because the website's being done. Quixotic means exceedingly idealistic, unrealistic, and impractical. Quixotic. I think I'm saying it right too. Quixotic. Quixotic, exceedingly idealistic, unrealistic, and impractical. Okay, so let's hope the market is not quixotic right now, because we need the market to continue to have this momentum and Santa Claus to continue to stay in town. The bears would argue that the market is exceedingly idealistic and unrealistic right now, but I think the market has momentum to continue running. And as a result, we are seeing the market to keep to keep going up. I could have sworn you've done quixotic before. I don't think I've done quixotic before. POV was an interesting word, bro. How does dictionary.com come up with POV as their word of the day? That is so weird. That is that's the first on the market open. Instead of a French word, we got POV. All right. Quixotic. All right. That's it for me. Thank you all for joining. We'll be back with Finance Junkies. We couldn't do it last night. A bunch of us got a little busy, but we'll be back today, 9 p.m. Eastern. We got a lot to talk about, especially around where the macro is going and some of these different indicators showing us where the macro could be. Got to talk about Bitcoin. We'll obviously be talking about a bunch of these companies. We'll do some updates on Google and Gemini and what's going on with that. Daily Palantir episode will be out in a few hours, so we'll be able to check that out. And I'll be back tomorrow, 8:45 a.m. Thank you all for being here. 8:20 a.m. We got CPI tomorrow, folks. CPI, big deal tomorrow. Let's see where it comes in. Thank you all for joining, and I will see you guys tomorrow morning on the market open. Bye, everybody. Have a good one.